Hey, it's Patti Scharf, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. And today I want to talk about not putting all your eggs in one basket. This video was actually inspired by and dedicated to Hector Garcia, CPA. He's a friend and colleague of mine, and I'm going to talk more about him later. But before I get into that, I want to talk to all my e-commerce sellers out there. You know, when I first went into business for myself, I remember a lot of people were like, well, isn't that scary? You have this good job, why would you quit and go work for yourself? Isn't that risky? And the thing that I always understood, and I think a lot of people didn't really get, was that I think it's a lot riskier to work for one employer who your professional fate rests in their hands than it is to go work for lots of different people. So like if let's say I have 5 clients and one client fires me, I only lose 20% of my revenue. I don't lose 100% of my revenue. So I never really saw owning a business as risky as other people said it was. I think e-commerce is a little bit different because there are so many people out there who are selling only on one platform. Maybe they're just selling on Amazon. And they may have lots of different customers, but really, if Amazon shuts you down for reasons beyond your control, you're kind of screwed. You know, that's putting your entire business in the fate of one company. That's why a lot of e-commerce sellers will sell on multiple platforms. They'll sell on Amazon and Shopify and eBay just to have a little bit of diversity, so if something happens to one, they don't lose all of their business. Another thing, and I see this all the time, if people only have one payment processor and then something happens to the payment processor or they shut you down for some reason, now you can't take on any more sales. So a lot of sellers have at least 2 different payment processor types. So if one's failing for some reason, the other one can pick up the steam. And then this is one thing that I've seen multiple times, and it always surprises me every time I see it. Let's say you're using something like Shopify, you have a credit card on file that pays your $39 a month fee, and I don't know, your credit card gets hacked or something, they cancel that card, they issue you a new card, and you forget to change the credit card that you have on file with Shopify. And then the month comes around and the $39 can't be charged. And so what Shopify will do is it will hold on to any of the money that it's collected on your behalf until you rectify the situation, pay them their $39. And we've seen companies who have had hundreds of thousands of dollars held for weeks because they didn't pay their $39 fees. So make sure that you stay on top of that one when you do it. Okay, so now I'm getting to Hector. Hector and I first met in, I think it was 2014 or 2015. We were having a discussion about Intuit versus Xero, and he's all in on Intuit, I'm all in on Xero, which, side note, you might think like contradicts the don't have your all eggs in one basket thing, but there's a difference between specialization and strategic development. Like if I was concerned that Xero was going to go under, or he was concerned that Intuit was going to go under, then yeah, we might have a different approach. But both of us feel like they're solid platforms, going to be around for a long time. They have no interest in shutting us down. They want to see us succeed just as much as we want to see them succeed. So so that's a different issue altogether. But I met Hector in like 2014 or 2015. We talked about like, why are you on Intuit products? Why are you on Xero? And we had a nice discussion. We actually ended up writing a couple of blog posts a few years back. I'll put links to them down below so you can read those. It was really interesting. Anyway, so Hector is a force to be reckoned with. He is just an amazing teacher. Everybody in the Intuit community knows and loves him. He is super passionate about teaching everything he knows about QuickBooks, QuickBooks Online, everything else. He is on YouTube, has like 70,000 subscribers or something at the moment, and he's posted over 500 videos. over the last, I'd say, 4 years. So he's all in on YouTube, and the world loves him, right? And for some unknown reason, about 2 days ago, YouTube just decided to shut off his account. No reason given, no idea what's going on. And obviously, it really has him rattled. But I want everybody who's watching this video to go tweet at YouTube and ask them, what the holy hell are you doing? Because it's just stupid. He is such a powerful force in this community, doing good and helping small businesses and other accountants and everything, that it would just be a massive disservice to the world at large to take his videos down. So everybody go yell at YouTube about that. But it reminded me of this whole concept of not putting all your eggs in one basket. He had such intensity about YouTube and taught classes on YouTube and how to do everything and whatever, that it really kind of pulled the rug out from under him when they shut him down. And I have every confidence that it's going to come back up. But even so, I think that as a business owner, you really need to take a look at what it is in your business that are your most vulnerable points, so that you can protect yourself. For sure, like in Hector's case, he had copies of all of his videos, so it wasn't like they just shut him down and he didn't have all that information. He can put all those videos on another platform, and he has such a large following, he's going to land on his feet no matter what he does. But what if you're selling on Amazon and Amazon shuts you down? Building that whole ecosystem for your business back up is going to be a real challenge. So I guess those are just my thoughts today on my Saturday Slowdown. If you like this video, please like, comment, and share. If you haven't already, please subscribe, and I will catch you later.